The psychology of short-term investing, why we panic sell. The stock market drops. Panic sets in, and before we realize, we've sold at the bottom. This isn't just poor strategy, this is human psychology at work. The market is a device for transferring money from the impatient to the patient. Warren Buffett. In this video, we'll break down why short-term investors panic sell, the emotional triggers behind it, and how you can avoid sabotaging your own trades. Short-term investing is more than strategy, it's emotional warfare. The moment we enter a trade, we're not just battling the market, we're battling ourselves. In investing, what is comfortable is rarely profitable. Robert Arnott, one of the most powerful forces in trading psychology, is loss aversion. The pain of losing is psychologically twice as powerful as the pleasure of gaining. So even a small dip feels devastating. And in volatile markets, that emotional pressure adds up fast. So, why do we panic sell? Here are 4 main reasons. Fear of further loss. We imagine that the dip will turn into a crash. Herd mentality. We see others selling, and assume they must know something we don't. Overexposure. Too much capital in a trade leads to emotional decisions. Noise overload. Constant news updates, alerts, and opinions overwhelm logical thinking. The goal of a successful trader is to make the best trades. Money is secondary. Alexander Elder. We don't just sell because of price action. We sell because of fear, uncertainty, and the illusion of control slipping away. The science behind it. Neuroscience backs this up. When we see red on our screens, our brain releases cortisol, the stress hormone. This triggers our amygdala, the fight or flight center, and suddenly, it's not just a trade. It's survival. Individuals who cannot master their emotions are ill-suited to profit from the investment process. Benjamin Graham. In this state, logic is shut down. And many traders mistake that emotional spike for a market signal, when it's actually just their brain asking for relief. Strategies to overcome panic selling. But here's the good news. You can train your brain to overcome panic selling. Here are 5 practical strategies that actually work. Have a plan. Define your entry, stop loss, and target before you enter a trade. Position sizing. Don't risk more than you can emotionally handle losing. Step back from noise. Disable constant notifications and stop checking every tick. Use a trading journal. Record your thoughts, emotions, and decisions. You'll spot patterns. Shift your time frame, zoom out. A red 5-minute candle doesn't mean your thesis is wrong. Amateurs think about how much money they can make. Professionals think about how much money they could lose. Jack Schwager. Final thought. Short-term trading will always be emotional. But the best traders don't eliminate emotion, they manage it. Understand your triggers. Build your system. Stay consistent. And don't let fear make decisions for you. The market always does what it's supposed to do, but never when. Jesse Livermore. Like this video if it gave you insight. Subscribe for more content on mastering the mental side of the market. Smart investing starts with smart psychology.